Let's do another example of a creditor's reconciliation. The owner, Mr. Swart of Swart Traders, receives a statement from one of their suppliers with the name Gerald and Company for the month ending 28 February 27. Now, Mr. Swart discovers the following errors when he compared Gerald and Company's statement with the account in the creditor's ledger. So obviously he has performed a reconciliation exercise. He has actually identified the differences between the ledger and the statement balance. And these are the 8 differences that he has identified. And they require from you to calculate the amount of the electronic funds transfer that Swart will pay before 15 March 27. Now, they give you a hint. They say compile the creditor account of Gerald and Company, and the B side of the story is calculate the balance on the statement of Gerald and Company as at 28 February. Now, this hint here is really not needed to be given. You should have known exactly, if you want to know what amount you're going to pay the guy, that you have to have at least the final balance for him. So therefore, if there are any adjustment entries that you have to pass, that you should pass it before you're going to determine the amount that is due to him. Take note, Swart Traders and Gerald and Company are not registered for VAT. Great. Now let's start off then by doing the general ledger, another general ledger, the creditors ledger account of Gerald and Company. So you're going to draw a T account, and the first thing that you want is the opening balance, and the opening balance they give you here in number 7. They say the balance of the account in Swart Creditors ledger on 28 February before the rectification of the above mentioned errors amounted to 854. So a T account is for the creditor Gerald and Company, opening balance 854 Rand. Now, we can also write down our reconciliation in the meantime, and our reconciliation is going to start off here. Let me write your reconciliation. And that is going to start off here with a balance as per the ledger, which obviously we don't know what that balance is, so you will just write in balance per ledger and you will keep that slot open until such a time that you have determined the final balance on the account. So let's see what are the other items that he has identified as differences between the ledger as well as the statement. Number 1, invoice 1410 for 300 Rand was recorded twice in Swart's records. The first question that you ask yourself is, who made the mistake? And the answer is, we made the mistake. So we recorded this invoice twice in his account. Now what happens if we process an invoice in a creditor's account? The account balance increases because it is a credit entry in the creditor's account. So he recorded that twice at 300 Rand. I should only have been once at 300 Rand. So obviously that additional entry that he passed must be taken out of the invoice, out of the account. Now in this question, do they actually stipulate what the inventory system is that is used by Swart? So therefore you can assume either a perpetual inventory system or a periodic inventory system. Now I have assumed a perpetual inventory system. So when we're going to remove that invoice out of his account in order to take out the second entry that was wrongly posted on the credit side, I'm going to debit his account with 300 Rand. The counter leg I've posted to my inventory account because I have assumed a perpetual inventory system. However, if you have assumed a periodic inventory system, it is not wrong. Then you would have posted it against the purchases account. So on this side, it can either be purchases or inventory. The second point here, invoice 1416 for 24 Rand was recorded as purchases returns on the statement. So our records was correct. So what happened on the statement? On the statement, instead of passing an invoice that would have increased the balance, the statement balance, they've passed a credit note that has decreased the statement balance. So the first one that you have to take out is the fact that you have recorded it as a credit note. So if you're going to take it out once, then you would have actually taken care of the mistake. But then you have to pass the invoice as well. Remember, purchase return decreases a balance. The invoice increases the balance. So you're going to take out the statement, you're going to increase this balance with 24 Rand, then you have eliminated the impact of the credit note. But then you still have to pass the invoice, which is going to increase this balance once more. Now, we have passed this entry correct in our records. So if we want to record this on our reconciliation, we must ask ourselves, what is the impact of this mistake in the reconciliation? What was included in our ledger balance? Included in our ledger balance was the invoice for 24 Rand, correctly. We want to make our ledger balance the same as the statement balance. Therefore, what we should do is we should do the same as what they've done on the statement. Now guys, we're not going to post it in our books. This is purely to make our balance the same as the statement balance, because that is what the reconciliation is all about. There are two pictures which should look exactly the same. And in order to make them look the same, I must take away from the one or I must add to the other one. And the end result must be that the two looks exactly the same. So what happens now? I had an invoice in my books of 24 Rand. So what did that do to my ledger balance, which I don't have a figure for as yet? That has increased my balance. So if I want to do the same as what the creditor has done on the statement, I have to take out that 24 Rand, which was posted as an invoice. And then I want to reduce my balance the same as what the statement balance was reduced when they posted the credit note balance, so that they can look the same. So therefore, I'm going to post that 24 Rand as an additional reduction of my own balance, so that I can show the same as what the statement has shown. I'm going to say that again. A reconciliation is nothing else than two pictures. What are the two pictures? The one picture is the creditor's ledger, the other picture is the statement. And all I want to do is I want to declare the differences between the two. And after I've declared the differences between the two, these two must look exactly the same. I'm not going to do incorrect postings in this account. That is not the purpose of a reconciliation. A reconciliation is all the valid differences that I have identified, and somebody has to act on it. Who has to act on this mistake of something posted as a credit note and actually it was supposed to be an invoice? The supplier, Swart Eng, must make that adjustment in his own records. Therefore, the only thing that I can do is I can show what was the impact of this mistake between this picture and that picture. So the first picture is I had an invoice of 24 Rand, the statement didn't. So let me take out my invoice of 24 Rand, then at least that thing will balance between the two pictures. Then the statement had a 24 reduction in the statement balance as a result of a credit note. Now let me put that credit note in the reconciliation as well, so that I can take it out of that balance, so it does not cause a difference between the two balances anymore. Right, the next one. Invoice 1419 for 140 Rand was indicated on the statement twice. Now again, who made the mistake? I didn't make a mistake. My account balance is correct. The mistake was again made by Swart Eng, and it came out on the statement. So I cannot pass any entries in my books, but this is a difference that I've spotted, and I must now declare that difference in the reconciliation, so that the ledger balance and the statement balance are actually on the same footing. So what does the invoice do? The invoice increases a creditor's balance. So therefore, what am I going to do? I'm going to increase my balance with 140 Rand, so that both my balance as well as the statement balance reflects exactly the same thing. I'm not going to pass an entry, I'm just declaring that this was a difference between that one and that one, and if the impact of this difference is that that balance would have been 140 Rand higher if they've done exactly the same as the supplier. Invoice 1516 was correctly indicated on the statement as 120 Rand. So it was correctly indicated on the statement as 120 Rand. After trade discount of 20%. So that is correct, isn't it? Because what do we record an invoice value at? After the trade discount has been deducted. But the amount in our records, in Swart's records, a trade discount was not accounted for, and he was entitled on a discount. So the statement is correct. We made a mistake. Because we made a mistake, we have to rectify the mistake. At what value should we have accounted for that invoice? We should have accounted for the invoice after the trade discount was already deducted. The 120 Rand is the amount after a trade discount of 20%. So the 120 Rand equals then 80% of the original normal invoice price. So I have to work back to the 100% of the normal price and then multiply it by 20% to calculate the trade discount. And then I have to pass an entry on the debit side of the account in order to reduce our balance. What did we do with the invoice? We posted it on the credit side. What did we post? We posted 120 divided by 80%. That was the amount that we initially passed on the credit side as the invoice value. So we passed it 150 Rand, 120 divided by 80%. So by how much was this invoice value overstated? 150 times 20% equals 30 Rand. So now we're going to debit this account in order to reduce the balance with that 30 Rand, and the counter leg will be posted against either inventory or purchases. Just remember one thing, if you have decided in this entry that you're going to use purchases, you cannot use inventory here. You have to be consistent right through and use inventory wherever I've bought or sent back some of the merchandise. If you started off with purchases, then you must be consistent, and all these things that I've called inventory, you should have called purchases. So you can't chop and change. Some of them can't be purchases and some inventory. It's either or. Either it's inventory or either it's purchases, but not both of them. Good. Invoice 1546 for 60 Rand was recorded as purchases returns in Swart's records. It was an invoice. We have recorded it in our records, so we made a mistake. We have debited this account. We reduced this balance by the 60 Rand, and we should have actually credited this account with 60 Rand. So in order to rectify that mistake, we have to post it twice on the credit side. The first 60 Rand will eliminate this entry that we've passed originally on the debit side for the 60 Rand, so it will just take out a mistake. And then we still have to post that invoice now in our books. So here we're going to post the invoice of 1546 of 60 Rand. If you put here a debit against inventory of 120 Rand and a credit against our creditors account of 120 Rand, so you didn't split the 60 and the 60, it is 100% correct. The amount owing according to the statement of 31 January 27, now remember that was the end of last month, we are now 28 February 27, was it was paid, amount owing according to the statement is 400 Rand, so that was the amount outstanding. It was paid by Swart after the deduction of a 5% settlement discount. However, the amount was actually not received by Gerald & Company on 4 March, and therefore the discount was not awarded. The payment and discount were recorded in the records of Swart in February. Now, the first thing that you should note is that we have paid this, when we paid this outstanding balance, we would have debited our creditors account. So we've already done that. The second thing that you should take note of is that we didn't actually, we debited the account with a full 400 Rand, but that was not the amount that we paid to the creditor. How much did we pay to the creditor? We only paid 400 times 95%, i.e. 380 Rand, because we have utilized a 5% settlement discount. Now, the third thing that you should note is that the creditor has only received this on the 4th of March. So obviously our statement will not reflect this money that they have received. So the money that they have received won't be reflected on the statement, although it has been posted in their creditor's account. So let's do the 380 Rand that they've received first, i.e. the 400 Rand times the 95%. We will not adjust our record with that because that is correct, so nothing will happen in this. So in our reconciliation, what did that payment do to our ledger balance? It has reduced our ledger balance. So if we want to eliminate that because it's not reflected on the statement, we are going to add it back. We're going to increase our balance then with a payment amount of 380, which is the 400 times 95%. Now, what also happened is that we have cleaned out the creditor's account with a full 400 Rand. 380 Rand was against the bank, and the other 20 Rand was against inventory because we have adjusted our settlement discount against our inventory account. So therefore, we must reinstate that other 20 Rand because we were not allowed to utilize that account. So strictly speaking, this account was not cleaned out. We paid 380 Rand, but we owed 400 Rand. He did not allow the discount, so we must reinstate it to the original 400 Rand. But we have already paid 380 of the 400 Rand, so therefore we are only going to pass this entry here in the account of 20 Rand. The difference between the 400 and the 380. And it will go against inventory. Good. So now we have reinstated this balance. That 20 Rand is a credit, so that will increase our closing balance in his account. So we still owe the creditor that 20 Rand. In the reconciliation, we have recorded the 380 Rand. Why? Because the 380 Rand was already in the 854. That is the balance that we've started off with. So all we have to recognize is that we have an entry that the statement doesn't show. And all we do here is to show that entry that we have that the statement doesn't show. And this 380 Rand has reduced our balance. So therefore we have to increase our balance again with the 380. Then we've eliminated it in our records and we will show now the same as the creditor on the statement. Number 7, we've done, that was the opening balance of 854 Rand. And number 8, Swart would like to pay their account on 15 March 27 to draw the maximum advantage from the 30-day 5% discount that is offered to them. Good. So if you remember correctly, the first question is how much money do we have to transfer to them if we utilize the 5% settlement discount. So what we're going to do now is we're going to balance off the creditor's account and we're going to work out what the closing balance on this account is all about. Oh, I forgot. No, we've done this one, the 30 Rand. This was the trade discount that we have reduced the accounts with. Good. So now we're going to balance this off and the closing balance of this account is 664. And once we've calculated that, we can transfer that to our reconciliation. Balance for creditors ledger, 664. I wants us to say how much is the EFT going to be equal to. The EFT is going to be equal to 95%. They're going to utilize the 5% settlement discount because this time they're going to pay in time. So 664 times 95%, they will pay over to Gerald & Company 630 Rand and 80 cents. The B part of the question wants what was the balance of the statement at the end of January, and therefore we're going to do this calculation here. 664 less 48 plus 140 plus 380 will give us our statement balance at the end of February of 1136.